Hey guys, Chris from Adapt Tuition here, and in this video I'm going to show you the solution for question 6 from the Jan 2014 PoA Paper 2. If you want to see the solutions for the other questions on this paper, I'm going to put a card up there and a link in the description below, so be sure to check those out as well. Now, a bit of a disclaimer about this question. This question covers non-profit organizations. So yes, the item of non-profit organizations is still on the current iteration of the CSEC POA syllabus in 2022. However, most of the content from non-profits has been removed relative to what it was before. All that really remains on the current iteration of the CSEC POA syllabus in terms of non-profits is, well, of course, a description of what a non-profit organization is and the receipts and payments account. In this question, you are going to be asked to do a subscriptions account, a bar trading account, and an income and expenditure account. So all those things were on the syllabus. They are no longer there. So this video is technically irrelevant to students sitting CSEC POA under the current iteration of the syllabus. The reason I am going to the lengths of doing this solution is because as follows. There are other students who watch my videos who do syllabuses other than the CSEC POA syllabus, and a lot of the content here will still be relevant to them. So I'm doing it for them as well. Two, I'm hoping at some point in time in the future, CSEC reverses its decision and brings back a lot of the non-profit content, in which case the content here will be useful at that point in time. And just a bit of a personal reason, I didn't like the idea of doing the solutions for questions 1 to 5 and 7 and leaving out question 6. So it's a bit of an OCD reason. But yeah, so again, the content in this video will probably not be very relevant to most students doing CSEC POA in 2022. If, however, your teacher is still teaching you subscriptions account and income and expenditure and bar trading account, I have no problem with it, but honestly, it's not going to come in your exam. Anyhow, with all that said, let's get into the solution. Okay, so let's take a read of the question. The treasurer of the West District Windball Cricket Club produced the following receipts and payments account for the year ended 31st December 2013. So what you guys have to know on the current iteration of the CSEC POA syllabus is how to prepare a receipts and payments account. So this is what it looks like. So you have the heading of the name of the entity, receipts and payments account, and the period to which it applies. You have a debit side. So again, this is basically a cash book with a single column, right? The debit side is the receipt side, money coming in. The credit side is the payment side, money going out. So you have a balance brought forward because again, it's basically a glorified cash book. Cash is an asset, bank is an asset, and assets have debit balances usually. Bank could have an overdraft, in which case the balance will be on the credit side, but that's not what's going on here. Now we have some items here that may not be very familiar to those doing the current iteration of the CSEC POA syllabus because these things were removed from the syllabus. Members subscription. So non-profit organizations were also called clubs, and you can actually see that word here in the name of the entity. And clubs have membership fees. Remember, these are non-profit organizations. They are not buying goods and reselling them to generate revenue and earn a profit, nor are they providing services for the purpose of earning a profit. They are clubs. They need to generate revenue to stay in business, but their primary purpose is serving their members. So profit maximization or profit earning is not in their forte at all, right? It's not under their purview at all. So these members' subscriptions are the major source of revenue. So subscriptions, also known as membership fees, and I think most of us should be familiar with the word subscriptions, right? Because I know some apps or some content or some websites require subscriptions to access premium content. They may have freebies and that kind of stuff, but you know what I mean. So you might see on your credit card bill every month a subscription fee coming out or whatever the case is. So that's what that is. Donations, I don't think I have to explain that. That's just people giving them money. Snack bar takings. Takings is another word for sales. Snack bar, that's like their cafeteria or their canteen or their bar or whatever you want to call it. So this is basically the sales revenue or the cash coming in from the snack bar. So again, remember, these entities do not buy and resell goods to generate revenue and earn profit. But they will most likely have a cafeteria or some place to get food for the members, because I mean, I can't imagine people going to some kind of club and not wanting something to eat or something to drink at some point in time. So the takings here are simply the money earned from selling whatever it is they sell, whatever snacks they sell. All right. On the credit side, now we have payments. So rent on premises, snack bar purchases, secretarial expenses, uniform expenses, repairs to equipment, purchase of new equipment, other expenses, and of course a balance carried down. So it's going to be carried down from the credit side, brought down on the debit side. So we still have money. We still have a positive balance, a debit balance. Now, let's scroll on a bit more to take a look at some of the additional information. So we have a column for 1st Jan 2013 and a column for 31st December 2013. So this is the column for opening balances. This is the column for closing balances. We have subscriptions in arrears. So again, subscriptions is a revenue, and in arrears means owing. So this is revenue owing or revenue accrued, which is an asset. And we have an opening balance and a closing balance. Subscriptions in advance. Okay, so subscriptions, yes, is a revenue. In advance means members have paid in advance or prepaid revenue. That's a liability. Now there's only an opening balance and no closing balance. Snack bar inventory. So we have an opening balance of 3260 and a closing balance of 3740. And equipment valuation. Be careful with that word, 17.5 and 20,002. And if I remember correctly, a bit earlier we saw where there was a purchase of equipment. So that's probably going to factor into for a depreciation calculation. We'll see. Okay, let's take a look at all of the requirements. So you don't have to keep scrolling up and down every time we get to a different part of the question. So it says prepare the subscription account for the year ended 31st December 2013, the snack bar trading account for the same period, and the club's income and expenditure account for the same period. So the income and expenditure account is their version of an income statement, the non-profit entity version of an income statement, and the bar trading account, right? So remember again, they are not a profit-making entity, so we don't have the trading account combined with the income statement. We do it as a separate working, but we use the final figure there as input for the income section in the income and expenditure account. Okay, let's start with the subscription account and go from there. All right, so as I said, subscriptions is a revenue. And we have some opening balances, so let's take a look across there. So subscriptions in arrears, we said that's accrued revenue, which means that that's an asset. And assets have what kind of balance at start? Debit balances. So we're going to see on the debit side of this account here, subs in arrears brought forward 250. We also had subscriptions in advance 190. So subs in advance, that's a prepaid revenue, and that's a liability. And liabilities have credit balances at start. So you might be asking, well, how do we have an asset and a liability existing at the same time in the same account? Well, as you can see, it's possible, which is why I kind of didn't like that it took this stuff off the syllabus, because it exposed you all to things that you may not have usually seen. Now, granted, you may have seen something like this in control accounts, so it's technically still there. But I guess I'm kind of old-fashioned. I still like the stuff I learned, you know. But anyhow, okay. What else goes inside of these subscriptions account? So if I recall correctly, if you look in the receipts and payments account, there was a figure for members' subscriptions. So that has to do with members paying subscriptions. So if we receive money, we're going to debit cash, or debit, in this case, the receipts and payments account. And every debit needs a corresponding credit. So what does that mean? It means in the subscription account, you are going to see on the credit side a figure saying receipts and payments. And that's the corresponding credit for the debit entry in the receipts and payments account. Now, closing balances. So if we go back down to the ending information, we see that there's only a closing balance for the subs in arrears. There's no closing balance for the subs in advance. So we have a closing asset balance, which of course is brought down on the debit side. But prior to being brought down on the debit side, you have to first be carried down from the credit side. Now there's no other information here, but clearly this account is not going to balance. What is the balancing figure? So just like for revenue accounts or expense accounts, most times when you guys get that question to do, you have to find the income statement figure, the revenue earned or the expenditure incurred. So here, what you are going to find is, well, their equivalent of an income statement figure is going to be called the income and expenditure figure, right? Now, how did we find that 10,580? We added up everything on the credit side and subtracted the total of the item on the debit side. So there was only one item here. So when we found the difference, we got that closing balance. No, sorry, we got the income and expenditure figure. And of course, if you add going down now on both sides, you'll see that the totals are equal. Okay, right. So that's about it for the subscriptions account. The next thing up is the snack bar trading account. Let's take a look. Okay, so as I mentioned before, these are non-profit entities. Clubs are non-profit entities. So unlike for-profit entities where we combine the trading section with the expenditure section, the income statement, here for non-profits, we need to do the working for any any income generating activities separately to the major income and expenditure account, so we don't crowd the income and expenditure account. Because there were other types of things that we could have done trading accounts for. There could be barbecues or fundraising activities and all sorts of things, and all those workings would need to be done separately. So this is an example of a type of working, that is done separately. So it is headed up properly: the name of the entity, the name of the statement, the period to which it applies. If you're wondering what FYE means, that's for the year ended. Okay, so what goes inside of here? Again, it's a trading account. So think about your trading account from your regular income statements. Sales is the first thing. So if we go across to the receipts and payments account, you're going to see snack bar takings. Remember I said takings was a synonym for sales? So that 13,440 is the first item that's going to be put inside of our snack bar trading account. What do we have after that? Less cost of goods sold. What's the first thing there? Opening stock. Stock of what? Well, let's go down to the opening and closing balances. We're seeing snack bar inventories. We have an opening balance of 3260. So we're going to put that in. And what do we add to opening stock? Purchases. So if we go up to the receipts and payments account now, we'll see snack bar purchases, 7150. So we're going to add those two items together and get the cost of goods available for sale. And what do we take away from that? Closing stock. So if we go back down to the balances, the closing balance for snack bar inventories is 3740. Taking that away from the cost of goods available gives us the cost of goods sold of 6670. And when you subtract that from the takings, you're going to get your gross bar profit of 6,770. That's this item here. Now that item will find its way to the income and expenditure account, which we are going to take a look at now. Right, so as I mentioned, the income and expenditure account is the non-profit organization version of the income statement. However, unlike the income statements to which you are accustomed, you're just going to have two sections, an income section and an expenditure section. Income is money coming in or earned. Expenditure is money spent or expenses incurred. So the principle in terms of the accrual concept and the matching principle, those things are still in effect. They don't change, but it's just the presentation does a little bit. So we're going to head up income. Now the first thing I want to put is the subscriptions earned. I usually put that one first because it's the major revenue item. Now where did I get that from? I got it from the subscriptions account, which we did in part A to the question. Okay, what's the next item I'm seeing here? Donations, right? So that came from the receipts and payments account. So again, usually the debit side of the receipts and payments account is where I would take most of my information to populate the income section, right? And finally, we're going to put the gross snack bar profit, which we calculated above in the previous part of this question. We just had three income items, and we're going to total them up to get a subtotal of 17,850 and start on the expenditure. So the expenditure will come from the credit side of the receipts and payments account. So we're seeing rent on premises, 5,000. We're seeing snack bar purchases. Now we dealt with snack bar purchases already in the calculation of the snack bar profit, the snack bar trading account, right? Now secretarial expenses of 2,500, we could put that in for sure. Uniform expenses 3,300, that goes there as well. Repairs to equipment 750. Purchase of new equipment, now that's capital expenditure, so that's going to come into play when we're calculating depreciation. So we'll come back to that. Other expenses 1,930, we're going to put that in. Now the depreciation. So let's go down to the opening and closing values for the equipment valuation. So opening and closing balances, sorry. So 1 Jan 2013, we had 17,005. 31st December 2013, we had 20,200. And don't forget, in the receipts and payments, we bought $5,000 worth of equipment. So if we started off with 17,500 and bought 5,000 more, you'll have 22,500. How do we get from 22,500 to 20,002? That's a fall, right? 22,500 to 22. Yeah, that's a decrease in value, and that can only be accounted for, well, apart from disposals of equipment, which we aren't told about, by depreciation. So if we take a look across in the income and expenditure account, we're going to see that depreciation calculation. See, 17,500, the opening balance, plus the purchases, minus the closing balance, and that gives us the depreciation. We're going to have a subtotal for expenditure of 15,780, and when you subtract that from the 17,850, we are going to get our, well, what we would normally call profit of 2,070, but here in non-profit organizations, we call it a surplus of income over expenditure. Okay, and that's about it for this question. Okay guys, so there you have it. That's the solution for question 6 from the Jan 2014 POA Paper 2. If you have any questions about it, please feel free to leave it in the comment section below and I'll get back to you when I can. If you want to check out any more videos, I'm going to put some cards up here. Remember to subscribe and be sure to check out my website for some free POA handouts you might find useful. Anyhow guys, as per usual, thank you so much for watching. Take care of yourselves and I'll see you next time. Bye.